Now it gives me great pleasure to invite Mr. Waina Tutuarima, Honorary Secretary of the Federation, to deliver his introductory remarks. Mr. Tutuarima, please.
Dear delegates, I'm very pleased to introduce to you Mrs. Margaret Leung. Mrs. Leung is Vice Chairman and Chief Executive of Hang Seng Bank and Chairman of Hang Seng Bank China, Hang Seng Insurance Company, Hang Seng Life, Hang Seng Management College, and Hang Seng School of Commerce. She's also a director of the Hong Kong and Shanghai Banking Corporation and an independent non-executive director of Hutchinson Whampoa and Swire Pacific. She began her career with the Bank of America after receiving her bachelor's degree in economics, accounting and business administration from the University of Hong Kong in 1975. She joined the HSBC Group in 1978 and has worked in a variety of managerial positions in retail banking, corporate and investment banking, commercial banking, and credit and risk management. So she's a very well-rounded banker. She was appointed Group General Manager in 2005 and was Global Co-Head Commercial Banker for the HSBC Group prior to her appointment in Hang Seng Bank. She's also involved in a number of government and industry committees, universities and non-profit organizations in Hong Kong and mainland China. She was appointed a Justice of the Peace in 2009. Please join me in welcoming Mrs. Margaret Leung.
Good afternoon, Mr. Lam, Mr. Lagros, ladies and gentlemen. I'm delighted to be here today to address the annual flagship event of the Federation of Hong Kong Business Associations Worldwide. Before I start, I wish to say that the achievements of any group are the results of the combined efforts of each member. Your individual efforts as Hong Kong's ambassadors have helped to strengthen Hong Kong's image in the world. For this, I sincerely wish to thank you all. Hong Kong is strategically positioned as a major international financial center. It is China's global financial center and China's major offshore renminbi center. Given the gradual liberation of the renminbi, this is a good time to talk about Hong Kong's development as an offshore renminbi center. There is increasing acceptance of using renminbi in trade settlement, in capital investments, and as storage of value in and outside of China. Because of its unique geographic location and its established financial structure, Hong Kong is well positioned as a platform to further China's currency liberation and capital market opening goals. The strategic role has the blessing of both the central and the Hong Kong governments. Only last week, I was a member of a joint Hong Kong Association of Banks and Hong Kong Monetary Authority delegation to Beijing, where a renewed currency agreement was signed. The new agreement, with an increased size of renminbi 400 billion, will facilitate the further development of offshore renminbi business in Hong Kong. Hong Kong now boasts the largest pool of offshore renminbi funds. Let's now take a brief look at our trailblazing journey to where we are today. In 2004, the central government for the first time announced that banks in Hong Kong could offer renminbi-denominated business to personal customers in Hong Kong. This made Hong Kong the first to launch an offshore renminbi center outside the mainland. In 2007, Hong Kong became the first place outside the mainland to operate an offshore renminbi bond market. In 2009, Hong Kong witnessed the launch of the pilot scheme for cross-border trade settlement in renminbi. In 2010, the pace of offshore renminbi business development has stepped up, where the geographic coverage of the pilot scheme was expanded. Restrictions on the corporate use of renminbi in Hong Kong were also basically completely lifted. In 2011, the pace of renminbi liberalization was quickened further. In January, the People's Bank of China announced that enterprises on the mainland are allowed to conduct and settle overseas direct investments in renminbi, encouraging the outflow and the use of renminbi outside the mainland. In August, Mr. Li Keqiang, the Vice Premier of the State Council, visited Hong Kong to celebrate the issuance here of 20 billion renminbi of sovereign dim sum bonds. This demonstrated the central government's strong support for Hong Kong's development as an offshore renminbi center. Vice Premier Li also announced a series of new measures that will enhance Hong Kong's renminbi business development. These measures highlight how the renminbi is evolving from a cross-border settlement currency to a cross-border investment currency. We will look at just a few of these measures. One measure is on renminbi FDI. With this relaxation, foreign investors will be able to make direct investments in renminbi on the mainland through Hong Kong. This will lead to a significant increase in the demand of renminbi financing in Hong Kong. Earlier this year, Hong Kong listed the first renminbi equity product outside the mainland. We expect to see more renminbi capital raising in the form of loans and the issuance of equities and bonds in the coming months in Hong Kong. Another relaxation is on trade settlement. The extension of cross-border trade settlement in renminbi from 20 provinces and cities to the whole of the mainland will benefit Hong Kong, given the prominent role it plays as China's trading partner. A further relaxation is on securities investment. Hong Kong companies will soon be able to invest in securities on the mainland via a renminbi-denominated QFII scheme. The new scheme will provide additional channels to deploy the renminbi funds generated in Hong Kong in the past years. This, in turn, will allow Hong Kong to develop more innovative renminbi wealth management products for customers. This policy will no doubt further strengthen Hong Kong's position in wealth and asset management. Renminbi business in Hong Kong has grown rapidly in less than a decade. Given Hong Kong's efficient and reliable renminbi infrastructure, over 80% of total renminbi trade settlement is currently handled by banks in Hong Kong. During the first 3 quarters of this year, renminbi trade settlement conducted through banks in Hong Kong amounted to over renminbi 1.3 trillion, and renminbi deposits in Hong Kong nearly doubled to renminbi 622 billion. This represents around 10% of the total deposits in Hong Kong. In the first 10 months of this year, over 70 entities issued renminbi dim sum bonds in Hong Kong, amounting to renminbi 92.6 billion. The outstanding amount of renminbi loans granted by banks in Hong Kong increased to renminbi 19 billion at the end of September, compared with less than 2 billion renminbi at the start of this year. Close to 800 foreign banks have chosen renminbi participating banks in Hong Kong to handle renminbi business, representing a 3-fold increase compared to the start of this year. Hong Kong is facing competition from other financial centers in developing offshore renminbi business. Why, you might ask? Do so many corporations around the world choose Hong Kong to take advantage of the renminbi opportunity? The answer is obvious. Hong Kong has unique strengths that place it ahead of any competition. Hong Kong is the key intermediary platform for mainland's trade with the rest of the world. About 30% of mainland's trade is handled by Hong Kong in the form of offshore trade and re-exports. In 2010, nearly 60% of mainland's inward and outward direct investments were originated from or directed to Hong Kong. These figures highlighted Hong Kong's role as both the gateway for foreign companies to access the mainland market and for institutes on the mainland to gain exposure to the international markets. Hong Kong's main unique strength is that its renminbi development is supported by the central and the Hong Kong governments. The National 12 Five-Year Plan, which was formed by the central government earlier this year, reaffirms Hong Kong's development as China's global financial center and a major offshore renminbi center. The policy address delivered last month by Hong Kong's Chief Executive, Mr. Donald Tsang, outlines the same goal. Our economic cooperation with the mainland has continued to strengthen through the mainland and Hong Kong Closer Economic Partnership Arrangement, the CEPA arrangement that most of you would have heard of, and as well as any other agreements with the mainland agencies. As a global financial center, Hong Kong possesses sophisticated financial infrastructure, world-class talent, and high efficiency. As part of China, Hong Kong enjoys a high degree of autonomy under the principle of one country, two systems. We allow the free flow of funds. We enjoy autonomy in our financial and regulatory systems and provide transparent operations. Hong Kong has prospered as an open and free economy. In fact, the freest economy in the world, according to both the Heritage Foundation and the Fraser Institute. Given our lead start back in 2004, Hong Kong has accumulated a wealth of operational and regulatory experience in renminbi business over these years. Hong Kong has developed a renminbi real-time gross settlement system, which is a highly reliable renminbi clearing platform to ensure smooth fund flows. Hong Kong's banking and financial institutes are committed to developing and promoting renminbi products and services innovation. A wide range of renminbi deposit products, from savings to structured deposits, is available. In response to the business needs of corporate clients, a suite of renminbi trade and supply chain solutions has been rolled out since 2009. Renminbi cash management solutions, corporate treasury services, and wealth management offerings began to emerge in 2010. These help clients better protect themselves against foreign exchange risks and minimize transaction costs in conducting cross-border renminbi business. Let me talk a bit about Hang Seng Bank. Hang Seng Bank has been a key player and pioneer in the provision of renminbi products and services in Hong Kong. We were the first to launch renminbi payroll services. We were the first to lead the range a renminbi syndicated loan. We were also the first non-mainland fund manager to offer renminbi bond investment funds in Hong Kong. With a growing network of operations on the mainland, Hang Seng is well positioned to help customers capture the trade and investment opportunities arising from the expanding offshore renminbi market. Ultimately, a strong offshore renminbi market requires sufficient renminbi liquidity. Hong Kong's banking and financial institutes will continue to explore alternative renminbi sources and channels with the authorities to meet this challenge. As a result of global economic uncertainty, there are growing calls for another stronger international reserve currency. The central government will no doubt take its time and give proper consideration before deciding on the pace of the internationalization. Because of the country's rapid economic growth and strong foreign currency reserves, the pace of renminbi internationalization will continue to attract attention around the world. The Chinese government has adopted an approach that is gradual, undertaking stable reforms in a prudent manner within a complex international monetary system. While the process of capital account opening needs to be carried out in a smooth manner to avoid unnecessary risks, we are optimistic about the internationalization prospects for the currency. We are also convinced that Hong Kong offers China a unique testing ground to undertake these great tasks. China is now the second largest economy in the world. The percentage of its total trade that is now settled in renminbi has risen from 0.7% in the first half of 2010 to 4% in the second half of 2010, and further increased to 9% in the first half of 2011. We can expect this to continue to increase. Investment between the mainland and the rest of the world can also be conducted in renminbi in future. Such investment is likely to grow rapidly due to China's increasing integration with the global economy. All this presents enterprises around the world with tremendous business opportunities. For investors who wish to take advantage of the opportunities presented by the renminbi, Hong Kong is the perfect hub. We provide a comprehensive suite of renminbi solutions. We offer renminbi capital at competitive and attractive funding costs. We have ample renminbi liquidity in Hong Kong. For businesses that wish to expand trade with the mainland or to tap a larger investor group through renminbi bond or equity services, Hong Kong is the ideal place for it. There are many reasons to be optimistic about the future of Hong Kong as the major offshore renminbi center. I'm confident that the momentum of renminbi market development will strengthen further in view of Hong Kong's first-mover advantage, sophisticated infrastructure, long-term competitiveness, and strong government support. Thank you.
Thank you, Mrs. Leung, and please remain on stage. May we ask Mr. Tutuarima to moderate the question and answer session for us. Mr. Tutuarima, please.
The advantage of the moderator is that you can ask the first question.
Okay.
And I will use that. This month there was the news that the city of Shanghai is also considering to issue a multi-billion bond over there, while also London and Singapore are looking at RMB business. How long do you expect that Hong Kong will have an advantage on the RMB bond and on other instruments?
How long Hong Kong will have the advantage really depends on how well Hong Kong will continue to progress in terms of its innovation, in terms of its service delivery, and in terms of its reach to the global market. Naturally, Hong Kong had the advantage that it is a Chinese city based outside of China, and it had an international reach all these years. We have a fantastic platform in the financial world. We know the international rules, we know the international game, and we have so far been doing very well. And in order to stay ahead of competition, we have lots to do. Not least of all, continue to strengthen our platform, continue to strengthen our talents, and continue to have international linkage to the rest of the world. And I think on those fronts, we should be relying on your support around the world, we should be able to achieve that goal.
Thank you. For this question and answer session, we will do that by hand raising. So who is having a question? I see a question over there.
Hi. Hi, I'm Eugene from Business Development Bank of Canada. You mentioned you do syndication loans in renminbi. Do you partner with the local bank or foreign banks?
And the syndicated loan that we have arranged by Hang Seng, we have been partnering with local banks. But when the foreign direct investments channels are completely opened up, we certainly expect there will be more needs for syndicated loans as well as bilateral loans from both the local and the international banks.
I received another question. An orthodox opinion might be that China will have to open up its capital account to the RMB because of an internationality of the trade currency. But has that already happened in practice?
I think China would take its time, would take its own course of progressing, partly driven by the fact that the global economic situation is uncertain. I think a lot of countries are now facing a lot of challenges, not least Europe and US. So I think China will be taking its own pace in opening up the capital accounts. But that said, the allowing of foreign direct investments into China and the encouragement of the investments from China into the rest of the world via Hong Kong is already a definite sign to show that China is on the way to make sure that capital can flow in and out of China, albeit in a controlled manner at the moment, but we do expect further opening up in the years to come.
Any further questions?
Thank you, Mrs. Leung. As follow-up to the earlier question, if and when China opens its capital account, the renminbi capital account, do you think Hong Kong's role will be diminished?
Not really, because you can see that throughout the years, throughout the progress between 2004, when we were first allowed to deal with renminbi outside of China, to now, there have been new measures being introduced gradually from China, where they want Hong Kong to take a lead role. For example, the going out strategy from China, the mainland authorities make it very obvious that they want them to come out through Hong Kong, where they can pick up the talents, where they can pick up the infrastructure before they go out to the rest of the world. And that's the reason why Hong Kong is the largest single center for investments to go into China and for investments to come out from China. And the companies, mainland companies that are listed in, that become publicly listed, a lot of them, the majority of them are listed in Hong Kong, albeit some also get listed in the US and Singapore, but the large majority is still via Hong Kong. So I think when the capital account is in the progress of being opened up, there will be further opportunities offered to Hong Kong, and it is really up to Hong Kong and the people in Hong Kong to find out the best opportunities for us to continue to progress.
I have a question here from the French Association. Just this month, the US Congressional Commission spoke of the RMB mounting a challenge to the US dollar in 5 to 10 years' time. Do you see that way? And what are the conditions then to arise this challenge?
You mean the further appreciation of the renminbi?
Correct.
I think that is a lot of pressure for China to appreciate, partly because of the large foreign currency reserve that China had been accumulating in the past years. I would think that China would certainly be doing it gradually rather than at a very rapid pace, because a rapid appreciation of the renminbi may hurt the Chinese economy. Exports would drop even further, and I think it will be difficult for China to ensure that the employment is the way that it is, which is growing steadily, and the economy is growing steadily. So I think the economy, the currency, no doubt will continue to appreciate. So far this year, they appreciated by 4%. We expect gradual appreciation to continue. At the moment, it's about 6.36 against the US dollar. We expect it by the end of this year, which is next month, it will be around 6.3. And in 2012, we expect the gradual appreciation to continue. But we do not expect that this will be done at a very rapid pace or a one-stop appreciation by 10%, 15%. I don't think that will happen.
Thank you. Our next question from our chairman.
Thank you. Mrs. Leung,
I thought you were going to ask in Putonghua.
可以是可以，可是也 For technical questions, I think I'm still a bit more at ease in English, if you don't mind. I read in various newspapers and magazines very different opinions about the timing of the renminbi becoming fully convertible. Some people have been saying already for years that it will be within 5 years. Some people say it will be a long, long time. What is your view on that? And then when the renminbi will become fully convertible, will that have an effect on the Hong Kong dollar and the peg? And would that also affect Hong Kong as an international financial center? Thank you.
Okay. I would think, can I answer the easiest part? And that's the Hong Kong dollar and the peg. I think it's quite obvious that both the central government and the Hong Kong government wants to maintain the peg. And that, part of the agreement of the one country, two systems agreement is to maintain Hong Kong for 50 years on an unchanged basis. That includes the currency. So I don't think there will be any change to the peg. So the pace of getting the renminbi fully convertible. Yes, I've heard 4 years, I've heard 5 years, I've heard 10 years, I've heard even more. My personal view is that it will not be 5 years. It will be a bit longer than that, partly because of the uncertainties in the rest of the world. We do not expect the US to come out from its current situation the earliest by 2014, which is what the Fed have been saying, that they do not expect to increase interest rate by 2014. So before that, I think the US economy will be weak, and the European situation will take presumably quite a long time to trade out of its problems. So I don't think China will be in a rush to fully convert its renminbi. But that said, there are already countries saying that they are prepared to take renminbi denominated instruments as part of their reserve. So that is happening even without a fully convertible renminbi. That, I think, will continue to happen. Even in Hong Kong, you can see that there are more people and companies willing to take renminbi as a, not a reserve, but as an investment and a diversification of their wealth and their assets. So on an unofficial basis, this is already happening, that people are using it for trade settlement, using it for calculation, using it for a reserve. And that will continue even without a fully convertible renminbi. I see that happening and finding more countries and more companies prepared to hold part of their reserves in renminbi. A lot of NGOs in Hong Kong, for example, pretty sick of the no interest in the Hong Kong and the US dollars, are gradually holding some renminbi bonds and renminbi currency in terms of deposits. I'm sure that this will continue to happen without a fully convertible renminbi. Time frame. Oh, the impact on Hong Kong. I don't have a crystal ball. I don't know when that would happen. I think it would be more than 5 years. 10 years from now, the economy may be the global economy may be doing very well, or at least we hope that it will be doing very well. There will be lots of opportunities for both the money to go into China, to get out from China. By that time, there will be the international board in Shanghai. There will be other opportunities open up for both Shanghai, Hong Kong, and Shenzhen. So I see opportunities coming up all the time. And I don't think just by the fully convertible renminbi is going to destroy Hong Kong per se, because Hong Kong had the infrastructure, Hong Kong has the talents, and Hong Kong has the law and order that the rest of the world had dealt with, understand, and are very happy to continue the cooperation with.
Another question which is maybe a little bit outside the RMB topic, but probably in interest of many of the participants here. With the current sovereign debt crisis, the US and European banks are expected to focus more on their home countries. How do you feel Hong Kong and in your case Hang Seng Bank, will deal with that and continue to support the SMEs?
I briefly mentioned about the US situation. I think it's a bit better than Europe at the moment, but it will have to take quite a while for the oversupply situation to be fully digested, to get the unemployment rate down, to get the consumption up and the confidence up, and the property prices to stop its free fall. So for the US, it will take some time. Had the US bank been withdrawing from the rest of the world, I think in 2008, there was a lot of panic of what would happen to the US banks. And of course, a number of them were rescued by the government and still continue to be supported by the government. And there is no indication that the US banks are withdrawing from the rest of the world. For Europe, as a different matter, the sovereign debts as issued within the Eurozone, a lot of that is actually held by the European banks. So I think the European banks this time will be pretty badly hit if the sovereign debt situation in Europe is going to deteriorate further. 50% haircut, be it 50%, 20%, is a haircut. That means to say when mark to market, your reserve will disappear, or part of it will disappear. And with the added requirement for the banks to recapitalize themselves, that means to say either they will have to go out to the equity market to raise funds, or they have to go to the government for support. So I think the European banks may face some challenges, and what evolves from it really need to be seen. EFSF, can it raise the type of funding that it needs? And if it does, will it be able to support all the debt that are falling due or becoming delinquent? We're not just talking about Greece. It could be Italy, it could be Spain, it could be Ireland, it could be the rest of the Eurozone land. So I think Europe is a longer and a story that will drag on for some time. What will happen to the rest of the world if the entire Europe is wiped out, which I don't believe will happen? I think eventually there will be measures to, everybody will have to share some of the pain. We do believe that eventually the governments, not just European governments, but other governments as well, may have to chip in and help out the European situation. But it will take them a long time and a lot of belt tightening before they can come back to any form of strength. And of course, we can see from the riots that are now in Greece, in Cairo, in Italy, that it will be a painful process, because that means to say the governments will have to introduce tightening measures that includes reducing the health care, reducing the social security, working longer hours, longer working life, and the like. It will be painful, but I think eventually it will trade out of this problem. So coming back to Hong Kong, I think Hong Kong, naturally, I don't believe in decoupling. I do believe that if the rest of the world, particularly the Western world, US and Europe, is going to face some troubles in the coming years, there is no way Asia in isolation can prosper. Exports, for example, had dropped quite significantly. It could be down 50% or 30% by 2012. So that would affect Asia as a whole, affect Hong Kong, affect China and other Asian countries. But I think China had sufficient ammunition at this stage to continue the investment and the consumption. I think the advantage with China is that it's a developing country. They do not have a lot of the infrastructure that the Western world has. If you look at the countryside, if you look at the urban areas, the rural areas, they have a lot of urbanization to be done. That requires investment, that requires labor, that requires a lot of raw materials. So that means to say, we are quite confident that China will slow down relatively from the 10% GDP growth last year to roughly 9.4, 9.5% in 2011, and probably around 8 to 8.5% next year. 8.5% compared to 10+% is a decline. But compared to the rest of the world, which is generating 1% or 0% GDP growth, it's not bad. And it will be sufficient to feed its own people. So Hong Kong, being very close to China, is now more impacted by China than by the US or Europe. It doesn't mean that Hong Kong will prosper out of the problems in the US and Europe. It will not, because Hong Kong is a very open economy, and being an open economy, and we're always watching the television for one thing. I think people are depressed as soon as they see the market volatility, the currency volatility, and some of their wealth disappearing because they are holding some of the bank's shares or whatever. So I think the China story will slow down a bit. The same is true for Hong Kong. We do expect the GDP growth in Hong Kong next year to slow down a bit, to lower than inflation. So Hong Kong will suffer because of the inflation more than because of the Western world.
A final question.
I think they have time. They need time to digest the shock.
You mentioned already that in addition to the RMB bonds, also other instruments will be developed. When do you feel that the IPOs, shares, derivatives will represent a fair and a regular part of the business?
If you speak to Charles Lee, our chairman of the CEO of our stock exchange, he will tell you that the stock market in Hong Kong is now all ready for renminbi IPOs and rights issues. I think the investors and also the companies that want to raise funds are finding out exactly what that means. If they raise capital in renminbi, is that freely convertible, freely remittable into China, and if they have two stock, they have two counters, one in renminbi and one in Hong Kong dollars. How will that work? Will that be arbitration? What is the liquidity? Would they be considered together, or would they be considered as separate stock? I think there are a lot of consideration before people actually roll out. But if you're asking about system, it's all ready. The brokers are ready. But I think the actual timing, it really depends on all these questions being answered and dealt with. But it will be quite soon, I would think.
Thank you.
Ladies and gentlemen, this brings us to the end of the luncheon. Thank you very much for joining us.
Ladies and gentlemen, this was a very interesting presentation and a very extensive question and answer session. Let us thank Ms. Leung for her presentation. Thank you. Thank you very much. Very interesting.
May our guests please proceed to enjoy your dessert. And the next session is a closed-door briefing by the Chief Secretary of the HKSAR, which will start at 2:30 in room N101 downstairs. So see you all there.